Hello students, hope you all are doing great. I am Achal Chaudhary, working as an assistant professor, BBA department in St. Andrews Institute of Technology and Management. So students, I am back with my online lecture series of income tax. So students, it's your lecture number 2 from unit 2. In previous lecture, we have started a new topic that was income from salaries. We have covered definition of salary, computation of salary and various allowances covered under the head. And today we will start with prerequisites, deduction from salary and salary from United Nations organization. So let's get started. Leave encashment allowances. Basically, it's a kind of allowances which is available under the income from salaries. So whenever leave encashment is received during the period of services, when a person is still working in the organization, then it will be fully taxable. When it is received on retirement, whether on superannuation or otherwise, in that case by government employee, it is fully exempted. No tax will be paid by the government employees by any other employee. So in that situation, rupees 3 lakh leave salary actually received, 10 months salary or cash equivalents of unavailed leave. So in out of these four, whatever the amount will be the minimum amount, so that will be your exempted amount. So we have to consider the minimum value of these four, that is your 3 lakh rupees or leave salary actually received or 10 months salary or you can say cash equivalent of unavailed leave. So you have to find out the minimum value of these four, then it will be your exemption. What do you understand by prerequisite? In common parlance, prerequisite means any casual emoluments or benefits attached to an office or position, in addition to salary or wages which is availed by an employee. In other words, prerequisites are the benefits in addition to normal salary. So I hope you are understood about the prerequisite. Basically, prerequisites is your, you can say, some extra benefit in addition to the amount that may be legally due or by way of contract of services. So it's your additional extra benefit, you can say, out of your employment services, or you can say any services which you have rendered. So in modern times, you can say salary package of normal employee includes monetary salary and prerequisites like housing or any telephone expenses. So these are kind of a prerequisite which a person receives through his employment. So again, prerequisite will be kind of three types like taxable prerequisite, fully taxable you can say, partially taxable and exempted prerequisites. So let's have a look on some various prerequisites which are like important according to your examination point of view. So let's have a look on them. See students, prerequisites are the value which is a kind of extra benefit. So it may have a value or it may not have a you can say monetary value. So to find the taxable value, you have to be ensure that this prerequisites have this particular value. So for that purpose, we always first of all we always find out the prerequisite value of different benefits which are employees receiving. For example, let's understand with this prerequisites value of motor car. So let's understand how to calculate the prerequisite value, how to find out the value of a particular benefit which our employee is getting. So if the car is owned or hired by the employer and all the expenses are also met by the you can say employer only, so if it is fully or you can say fully used for official purpose only, then no prerequisite value will be there, no value will be taxable in this case. But if it is partially used for personal use also, then in that case Up to, if a car is up to 1.6 liter cc engine is there, then value of requisite will be computed by 1800 per month. And if it is above 1.6 liter, then 2400 per month. And if chauffeur is also provided, chauffeur means driver, if chauffeur is also provided, then rupees 900 per month should be added to the above value. If the car is owned by the employee and expenses met by the employer, so same, if it is fully used for official use only, then no value of requisite will be computed, then no tax will be paid on this. But if it is partially used for personal use also, then actual amount of expenditure incurred by the employer as reduced by the requisite value which has been arrived in first case. And third is when the car is owned by the employer and expenses met by the employer employee, sorry. So in that case, if it is used for personal use also, then if the car is up to 1.6 liter cc engine, then value of requisite will be 600 per month. And if it is above then 1.6 liter, then the value of requisite will be 900 per month. And again, if the chauffeur is also provided, then the salary of chauffeur will be assumed as 900 per month. So this is how you have to calculate the value of requisite value of any benefit or any kind of asset. So this is how you have to calculate, and you have to remember all the, you can say, requisite values. Next is valuation of free or concessional education facilities. If the education institute is maintained and owned by the employer, if free education facilities are allowed in any other educational institution by reason of his being in employment of that employer, so the value of benefit will be cost of such education in a similar institution in or near the locality. However, there would be no prerequisite if the cost of such education or the value of such benefit per child does not exceed 1000 per month. If it's a other case, then in that case, amount of expenditure incurred by the employer in that behalf. So that will be your value of benefit. Medical facility. So many times employees also get the medical facility also. So to calculate the value of requisite, we have to go through the medical facilities. We have to look after the expenses which has been incurred by the employee. So first, medical facility provided in India only. So the case should be that facility provided to the employee or his family in hospital which is owned by the employer, या तो employer का खुद का hospital हो, या फिर it is owned by the government or local authority, or in case of payment reimbursement by employer of medical expenses is incurred by employee on himself or his family. So in that case it will be fully exempted, no tax will be given. If employee or employee's family person is having some specified prescribed diseases like cancer, TB, AIDS, etc., or if the medical facility has been occurred under the insurance, any kind of insurance, then also these treatment will be exempted from tax. If the medical facility provided outside the India, in that case, medical expenditure which is incurred by the employee, you can say employee or employees family members, or cost of stay abroad. So staying abroad is, you can say, taxable free up to the patient and one attendant is allowed. So that will be exempted up to a certain limit which has been prescribed by the RBI. And cost of travel, again patient plus one attendant or caretaker is allowed under the act. So that will be exempted only when gross total of the employee is not exceeding rupees 2 lakh per annum, then it will be exempted up to 2 lakh, and if it is occurring or if it is increasing exceeding 2 lakh, then it will be taxable. Use of movable assets. If a employee is using the asset, any kind of movable asset, in that case value of requisite will be determined like use of laptops and computers is allowed, because it is assumed that a person or employee is using the laptops and the computers for the purpose of completing his work, employment work. So the value of benefit will be nil. If movable assets is other than laptops and computers and assets already specified, then 10% per annum of the actual cost of such assets or the amount of rent or charge paid or payable by the employer, as the case may be. In case of transfer of those movable assets, so the value of requisite will be determined like computers and electronic items. In that case, value of requisite will be depreciated value of asset, and depreciation will be calculated at the rate of 50% on WDV method for each completed year. And second, if that asset is motor car, then depreciation value of asset will be determined as at the rate of 20% on WDV method for the each completed year of usage. And if any other assets apart from computer, electronic items or motor cars, then the depreciation value will be 10% per annum on SLM for each completed year of usage. So this is how you have to calculate the value of requisite when a movable asset is transferred to the employee. Deductions from salary. As we have seen in your previous lecture, as we have covered in the previous lecture, like after computing the gross total salary, so there are some deductions which are available, and that is your standard deduction, entertainment allowance and professional taxes. So these are the deductions which are available under the income from salary to find out the taxable salary. So a standard deduction of rupees 50,000 or the amount of salary, total amount, that is your gross amount of salary, whichever is lower is to be provided to the employees. So most of the case यही होता है, lower value is up to 50,000 only. 50,000 as a standard deduction हम लोग consider करते हैं. But if your salary is lower than the 50,000, then it will be your standard deduction. Next is entertainment allowances. So while computing the gross total income, first of all you have to write down the entertainment allowances. You have to include in your gross total income, and after computing it in your gross total income, what you have to do is you have to deduct the same value again. So the value of deduction will be as follows, like if the person is government employee, in that case, so deduction is allowed 1/5 of the basic salary or 5,000, or entertainment allowance which has been received by the employee. So we have to find out the minimum value out of these three. So that will be your entertainment allowance deduction. And last is your professional tax on employment. So professional tax, or you can say taxes on employment, which is levied by the state, that is also allowed as a deduction, but if it is only paid by the employee. अगर employee ने pay ही नहीं किया है in the previous year, then no deduction will be provided. But if he have paid the professional tax, then he must get the, or you can say exemption up to rupees 2,500 per month. So there is again a certain limit, that is 2,500 per month, that deduction will be provided to such employee as professional tax. And last topic is salary from United Nations organizations. According to Section 2 of the United Nations Act 1947, it says that whatever the amount of salary or emoluments which is paid to the United Nations officials, that is exempted from income tax. Besides salary, any pension covered under the United Nations Act and received from UNO is also exempted from tax. So basically, the amount which UNO officials is receiving from the United Nations Act, under the United Nations Act, that will be taxable free from the income tax. So students, that's it for today's lecture, and I have tried to cover as many as possible prerequisites I can cover in today's lecture, and still there are lot of prerequisites which are available under the Income Tax Act. So I request you all to go through the PDF notes which I have already provided to you. Just go through those notes, then only you will be get to know that, only you will understand what all prerequisites are available and how to treat those prerequisites. So students, that's it for today's lecture. In next lecture, we will continue your income from salary. We will solve some numericals related to this topic. So here are questions based on today's lecture, and these questions has been asked in your previous year examinations. Question number 1. Explain taxable prerequisites. Question number 2. Discuss the composition of salary from income tax point of view. Discuss the fully tax-free allowances. Thank you so much for your time. Stay tuned for more videos.